begin today, I'd like to go over some housekeeping. This session is being recorded, so after the session ends, you'll be able to return and rewatch this webinar. You can also send in your questions in at any time during the webinar using the Q&A panel you have, as we'll have a Q&A session at the end of the presentations. At this point, I'd like to introduce our speakers for today, Mark DeCastro, Research Director for IDC Financial Insights, and Steve Luong, Director of Product Marketing at Kony Inc. As an industry veteran, Mark DeCastro provides extensive information, technology expertise to assist IT managers with all facets of web-based technologies for online strategies within financial institutions, including home-based banking, bill payment, check imaging, cash management services for corporate and legacy system data transformation. And as Director of Product Marketing at Kony, Steve Luong is focused on delivering exceptional mobile experiences for customers. Steve is a technology veteran with experience in brand management, product marketing, strategy, and marketing operations. He has held various leadership roles focused on mobile applications, information management, endpoint backup, file sync and share, and server hardware solutions. And with that, I'll hand it over to Mark to kick things off.
Great. Thank you, Kevin. Kevin, you should have said, is your mobile strategy doomed? Right? You were very monotone, but the title of the slide and the webinar is kind of scary sounding, right? Is your mobile strategy doomed? So great. Thanks for inviting me here today and engaging in the conversation with you around mobile banking. In particular, what's driving mobile banking investment by financial institutions, and what are some of the trends we are seeing here at IDC Financial Insights, and really, where do we, and when I say we, I mean the banking industry, kind of go from here? So with that, I'm going to take a brief look at our agenda. First, a bit of an introduction as to who we are and make sure that our marketing folks here are happy. Then I'm going to provide you with our latest set of industry drivers and predictions. And really, I spend a particular focus as to those that are impacting the mobile banking space. I'll then go over some mobile banking trends and tendencies that we gather from a global household survey. Just to upfront, the information I'm going to present today is really focused on the U.S. market. But we do see similar trends in other regions as well. Next, I'm going to provide you with some questions that we feel organizations should be asking about their strategic approach to mobile banking. And finally, I'll provide you some best practices from the field, some hints we've picked up when talking to other banks and credit unions when it comes to deploying, developing, and maintaining their mobile banking platforms. Okay, whoops. Kind of got moved ahead here. Let me put in slide 6. I don't know how that happened. Sorry about that. Let me push slide 6. Okay, so 30 seconds promise. For those of you that don't know about IDC Financial Insights, we're part of the larger IDC organization. We are based here in Boston. We've been focused in business for over 50 years and have 1,100 analysts worldwide in 110 countries and 54 offices throughout the world. We provide unbiased, fact-based research on all facets of IT, and then we spent a considerable amount of effort a few years back discussing the 4 pillars of IT strategy, which is big data and analytics, cloud, social, and mobile. And now we're focusing on really what is being built on top of those 4 pillars, and we're calling that the third platform, and mobility is certainly a big play here. So I'm in the financial insights practice, where all the analysts here have come from the industry, and we verticalize the research to be consumed by lines of business and marketing professionals, as well as IT decision makers. We also vertical practice areas covering health, government, manufacturing, energy, and retail. So I'm done. No more marketing spiel after that. So this section here, will focus on the current industry drivers, and it really sets us up for what is shaping the industry today and what specifically the role of mobility will be. And let's first look at somewhat of the key drivers are for financial services. These drivers impact both CIOs and their business partners and will be relevant for at least the next 3 years. As our global team was working on our predictions, we prioritized these drivers in order of impact and importance. So those that are at the top are the most impactful and most referenced in our predictions. So at the very top, we have DX, which is digital transformation, which is accelerating business disruption faster than anything we've seen here in recent years. We see DX as an outside-in process, seeing that we have this accelerated adoption of digitization and business initiatives that are trying to leverage IT's ability to provide ways to digitize and improve all facets of the customer experience. And this can be B2B, B2C, and even C2C. And this is particularly true for mobile banking and how the consumer's expectations and experiences is shaping what services are being offered and developed. Next, we have staying relevant as new entrants and digital products disrupt the marketplace. Trying to stay relevant often begins with a solid mobile strategy. Yet we see many organizations that still take a defensive approach to mobile. The next driver is something that we're calling CYQ, which really is about the Internet of Things. Again, this is going to be very relevant within our industry as we continue to look for ways to augment a connected customer and employee into a more satisfying and hopefully more profitable experience. The next driver we have is legacy modernization. And while some might look at mobile banking and not think, well, that's not really impacted by legacy, that's really inaccurate. Some organizations may in fact be on their first or second gen mobile platforms, and they're needing a way to modernize their existing offering. And pretty much many platforms, pretty much all platforms really rely on some sort of a legacy on the back end to get account information, to move funds, and enroll customers. So this is something that the industry has been struggling with for years. So the bottom three drivers, we have new nature of risk, the cloud life, and talent quest. They all have some impact on mobile banking, although not as great. From a risk perspective, mobile in some organizations is still looked at as a more risky platform, which really explains why we have limits around remote deposit capture, as well as a relatively slow acceptance of mobile payments. And with Talent Quest, one of the challenges had by many organizations is that they have a workforce that is customer-facing that has been trained on mobile, yet they may not be using it themselves. And that's always a challenge, right, to have them sell or support something that perhaps they do not fully understand or certainly do not fully use. So that brings us to our top 10 predictions of 2016 and beyond. So I have all 10 listed here, but I'm only going to highlight those that have a specific tie to mobile banking and mobility in general. So first, a quick explanation. The predictions are not in any ranked order. The bubbles you see that are aligned with each prediction has an X and Y axis and a size. The size is simply the complexity or cost to address. And the X-axis is a time to mainstream. So is this next year, this year, or the following year from a budget standpoint? And then the Y-axis is the organizational impact. Does it impact just a single department, which is towards the bottom? Is it multiple departments or business units, or at the top is it company-wide? So quickly, we predict that banks are going to double the workloads put on the cloud, that IoT will become a packaged software solution for the insurance industry, that organizations will monetize risk and compliance investments leveraging big data and analytics, that cognitive systems will create a 20% improvement in overall operational efficiency, that over $300 million will be spent on transforming internal payment technology, and finally that robo-advisors are going to play a big part of the cap market space over the next 3 years. So now when we think about specifically mobile banking and mobility, I have 4 of those predictions highlighted. The first one is that PFM will be a key driver for mobile banking adoption. Now, this may be true first in other countries or regions. Here in the U.S., we really haven't seen a big uptick in PFM to get traction. But I know in Europe, our analysts there are saying that they're starting to see more and more inquiry around PFM and kind of leading with the mobile platform to do that. Next, we have that FSIs globally will spend $500 billion on IT by 2017. And at a CAGR of 4% overall. We expect investments in mobile technologies is actually growing faster than that 4%. We think mobile payments in particular, and the next prediction is going to approach $1 trillion. And the majority of those are going to things like an Amazon app, right? Purchasing, if you've seen the commercial, what's that little baby carrier for that dog with a broken leg? The guy's all sad about that. So I did leave one out, and I want to dive a bit deeper into that one because I think it has most impact to what we're talking about here on the mobile strategy. So this prediction is that omni engagement levels becomes a barometer of customer profitability for financial institutions as the number of interactions increases 10% year over year. So we do know here is that the investment into digital channels like online and mobile is outpacing that 4% growth I had mentioned earlier on overall IT spend. This is pretty much all institutions have been implementing online banking, and I imagine pretty much all institutions now, maybe a few holdouts, are offering some sort of a mobile offering as well. And we feel that the cloud is going to become more accepted as a usable platform for delivering mobile solutions, and institutions are beginning to embrace the cost savings of both mobility and the cloud. We also feel that the user experience needs to really detach itself from the legacy platforms, right? So as the technology changes, it can be easier to adjust accordingly. So no more kind of saying, oh, we can't do it because our legacy platform won't let us do it. So our guidance is that organizations need to shift away from the mindset that if you build it, they're going to come, and really engage with the customer once they're there, right? And that can be there either digitally or physically. And mobile banking payments really is a key component of engaging these consumers, particularly the younger and even the more affluent demographics. But there's one precaution, and I'm going to get into that in a minute. Consumers are hypersensitive to over-marketing efforts. We have this DVR, skip the commercial kind of mindset we have, so we really need to be coddled into cross-sells and upsells and not have that kind of marketing effort forced upon us. So this next section will provide some analysis from our household consumer channel preference survey on mobile banking and look at some statistics and tendencies for the U.S. retail banking customer. IDC Financial Insights conducts a household survey every year. We've been doing this now for over 8 years. And it's interesting to see how the trends, particularly as it comes to technologies like mobile banking, have evolved. Here we see the penetration rates for the various channels offered over the last survey years. And by penetration rates, I'm basically talking about how many people in our survey responded to some level of interaction with that channel. Now, it could be very frequently, and we see that certainly with mobile and online banking, or it could be very infrequently, like visiting a teller, but they have some interaction on some routine basis. In our surveys and similar surveys, continues to point to the branch as a key component, even though transaction activity we know is moving towards the digital channels. What's also interesting is that all the channels we see pretty much are seeing growth year over year in these penetration rates. And mobile, by far, saw the biggest growth from 46% in 2014 to 56% in 2015. And I do anticipate that when we run the survey again and we're teeing it up for early in 2016, that we'll see another rise as well. Now, we do anticipate that trend is going to continue to grow. Now, mobile penetration still lags the online penetration for now. Our estimate is by 2020, if not sooner, we should see those two kind of maxing out in that 85% area that we saw last year. Okay, so let's look at now some different delivery channels of mobile banking. So we have SMS, browser-based, and downloaded apps. And we want to see what the differences there are in each channels, right? So let me explain the color coding and the legend that's going to kind of talk about the next few slides. First, when we ask people, and we only are showing people who own a mobile phone, right? Whether or not they're using mobile banking or not, we ask them how do they feel about the various technologies for certain transaction types, right? So we ask them, one, if they've used it, which is showing up in green. If they've not used it, but they might be interested, right? Which is kind of interesting because that shows you, all right, here's the potential here, and that's in yellow. And if they've not used it and they really said, well, I'm not interested in that technology, and by process of elimination, that's going to be in red. The legends of high, medium, and low is indicative of, within that feature, how are the responses grouped by frequency. And the trend compared to last year. So looking at SMS, first off, we saw about 26% of those who owned a mobile phone have used SMS to interact with their bank or credit union. The feature most used were checking balances and receiving alerts. They both scored high with our consumers. But both actually saw some declines in usage year over year, which is why when you look at the no, not interested, you can actually see that we group the respondents as a low score there, but that increased to medium in our last survey. So we can kind of use that to trend that SMS usage is likely going to stay flat or maybe even decrease in time. What also stands out is that there was a high grouping of respondents regarding transferring money that were simply just not interested. So really, if this technology were to take off, banks are really going to have to do a better job at communicating with their customers about the benefits of SMS, and if they want to drive more traffic towards that mobile channel, they really need to get out there and kind of pound that drum, because we really aren't seeing the uptick in SMS that we thought we might have seen. So let's look at usage using a browser on a mobile device. And by the way, for a mobile device, this could have been either on a tablet or on a phone. We did allow both responses. So remember, we're at 26% for SMS. We saw 47% said that they have used a browser to interact with their bank, which is a nice increase, actually. In fact, the browser has really led over the last few years in usage by the consumer to interact with their financial institution. Now, arguably this could be primarily getting informational purposes, right? So they're surfing on the couch and they're visiting the website trying to get for more information about a bank product or a service. Now, we're also using the same groupings and color codes for these functions with the mobile browser, but we also do see some interesting trends here. First, like in SMS, we saw an increase in groupings for the respondents who displayed no interest in moving funds using the browser. The most popular type of transactions were really the balance information and transactions, right? However, unlike SMS, there is some growth in usage here year over year. So we feel as the technology continues to develop, particularly as we're seeing advances in HTML and CSS, we anticipate that the browser may indeed become a more integral part of the mobile banking experience. Which brings us up to the next platform, which is on the downloadable applications. Again, so this is both using a tablet or a phone. So we see here that only 36% of individuals with a mobile phone are actively using downloadable apps to interact with their FI. Now, if you do recall there earlier, I had the overall penetration rate at 56%, yet you might be saying these numbers are not adding up. So basically, I forgot to explain that these numbers are those who are active, plus we had situations where someone may have been using one of the platforms and not all three. So that's how it kind of math adds up. So back to the numbers. So again, transaction and account balances are the most popular transactions, and people are comfortable with those types of transactions. But we saw something in the downloadable app that really caught our eye. Notice the activity of receiving marketing information and special offers. That went from a high grouping in 2014 to very high this year. In fact, of all the transactions listed on all our channels, this was by far the highest percentage of individuals who said they had no interest in this. I believe this one was over 50 or 60%. They said that they have no interest in getting special offers on their app. And this is really an interesting trend, and perhaps it's because consumers are concerned about giving up too much privacy for what they consider to be little in the way of compensation back to them. So it's one thing to say, I have Dunkin' Donuts app running on my phone, and then when I'm within a mile or I'm doing something and get a message that if I come in I can get a turbo shot in my iced coffee or get a free donut, right? You're going to come in and do something like that. But what are you going to do at the bank, right? Are they going to give me an extra 1/100% on my checking account if I come in right now? So it's a different product we're selling. We really need to figure out how we're going to be able to interact with these customers in a way that they want to interact with us. So let's look at some satisfaction information. And we do have some work to do in our industry when it comes to mobile banking platforms. In fact, on this slide, we'd asked consumers how satisfied they were with their mobile experience. In this particular survey, we asked both individuals that had a banking relationship, and we also asked individuals who had a retail experience, meaning they had purchased something. So we have a mixed bag of news here. On the negative side, all the channels, the branch, the ATM online, and even call center, their satisfaction levels were actually higher than the mobile channel. So the good news, we're not alone in the industry, right? Everyone says, oh, look to the retail and see what they're doing. Well, the retail is the light blue line, and we're the dark blue line, the banking industry. And we're right in line with retail for mobile experience, right, and satisfaction. And excuse me, that seems to contradict really what we've been told, that we need to become more like a retail industry and that we're thinking about our channel strategy. But the retail industry is still also wrestling with mobile offerings, and the consumer seems to be saying that so far their overall satisfaction is kind of lukewarm at best. What really is telling here is that almost half of our respondents said that they were either dissatisfied or extremely dissatisfied with their mobile banking experience. And the overwhelming reason why they're not satisfied, and if I did put out a poll, I imagine most people would guess quickly, but the issue is around security. After that, we have that they find it difficult to use. We have some customers saying that the bank has no remote deposit, and others are saying that there are fees involved or that there are limited mobile payment options. So since security is kind of the big reason for the low SAT, let me give a minute on that. To me, this is a perception issue with a consumer, and unfortunately at times it's out of the control of the institution. As we continue to put technology in people's hands, we continue to be amazed at how consumers seem to have no concern for common sense when it comes to security measures. Things like writing their PIN down on the back of their ATM with a Sharpie, not securing their home networks with virus and malware and tighter firewalls. Now, the consumers do not see security as being a shared responsibility. They honestly feel it's up to the bank. So because of this, the banks need to communicate back to the consumers that not only is mobile banking secure, but the same protection they have for unauthorized access and fraudulent transactions applies, whether it's check fraud, online ATM fraud, and mobile fraud. And we've been lucky for the most part when it comes to mobile security, but some recent vulnerabilities, surprisingly even with some Apple apps, may make people continue to shy away from mobile banking technology, despite all the advantages that we see. So let's look a little bit deeper into one of the issues I earlier identified with mobile banking and privacy. You can see the results of a question we asked around privacy control and relevant offers. The dark blue wedge, which is almost 60% of the respondents, stated that they would be okay with more control of their privacy in exchange for getting less relevant offers. In essence, they're saying, please leave me alone and make sure that when you send me marketing messages or offers, I know that they will not be relevant to me. It's like sending somebody information about home equity loans when they rent, or talking about college education financing to someone who's 70 years old and the grandparent. Or my favorite, even though I'm in my mid-40s, I had an offer from my bank for a seniors product that I had to be 55 years old or older to qualify. I'm surprised they don't know how old I am. Seems surprising since I had to disclose all that upon account opening. So anyway, there really is only a small percentage of individuals who are willing to fully open up the kimono in exchange for better or more relevant offers. And if you look about it, the demographics of those, they're younger. Unfortunately, the lower wage earners, and that may not be a key demographic necessarily for financial institutions, at least not yet in their life cycle. So this is a challenge, right? How can a bank or credit union continue to promote themselves and their products if, in fact, people are not willing to open up to these special offers and promotions? Why is it that retailers seem to be okay with this, right? But banks seem to be struggling. I mean, I get my Affinity card over to CVS. They know when I have a cold, a headache, a rash, and in exchange I get a 4-foot-long receipt and 50 cents off my next tube of toothpaste. So it's a struggle that the industry definitely is having. All right, so now we're going to shift gears, and I'm going to provide an overview about what's happening in the banking industry, kind of the overall trends specifically around mobile banking. It's a great time for the consumer as we really begin to see a culmination of the big technology drivers come together, and they're all interrelated and interdependent. And mobile is such a key component of that, particularly as the penetration of smartphones has reached a point where it is an exception nowadays to not be using one. So let's talk about some essential questions that financial institutions should be considering when thinking about their mobile banking strategy. So I'm going to read these first and spend a minute or two about these. First, ask if you are looking at mobile banking as a defensive play, or is this a leading solution for you? Now, what do I mean by that? Let's face it, many institutions use mobile just as an opportunity to check a box and allow their consumers the ability to interact with them using a mobile device. There could be a good reason for that. It could be a strategic direction. And if so, then the way to go about mobile solution to your senior management or board of directors will be different than an organization that's more progressive with their mobile offerings. Next, we ask a question about the mobile banking platform. Should this be a standalone or part of online banking? Again, it really depends on how you're looking at mobile as an option. Is it really just an offshoot of online, or are there differences? If a mobile solution is built on an online banking platform and a customer wants a mobile-only option, how can the institution properly enroll them? What about the ability to enhance one platform at a time? Can that be done in an environment where everything is all together? Again, the answer to these may be quite different for each institution based on their current offerings and where they want to go with mobile. The other strategic questions that many institutions need to ask, and particularly those under $50 billion here in the U.S., is whether or not they should look beyond their core banking provider. So there's no doubt that any solution that is used must be fully integrated back to the core platform, which is why many institutions begin to look there first. The issue is, I think, that in spite of due diligence, institutions sometimes do not have a proper RFI or RFP process, and they may in fact not find other vendors or other features or functions that turn out to be important to them. There is certainly much that can be learned by going through the process, and in fact, many times organizations are pleasantly surprised that doing more work up front may have long-term benefits both for the customer as well as a financial institution. Next, what is the level of due diligence that needs to be performed when looking at mobile offerings? We suggest you look at this in two main areas. First, the overall capabilities, then from a strategic one. For strategy, look at things like their offering capabilities. This includes features and functions, their different delivery models, and their future integration strategy. Also, look at some of their go-to-market strategies, including their pricing models, their sales and distribution strategy, and their customer service and interaction programs. Finally, an overview of their business strategy, and this includes things like their overall growth compared to their peers, what are they investing in R&D, and what does their financial health look like. From there, look at the overall capabilities and delivery, and this will often come from the interaction with current customers or from simply asking questions about the product. Understand what delivery models they offer, how it will integrate with your back-end systems, and what are the levels of satisfaction of current customers. Make sure that you fully understand the pricing models used and that day-to-day support is satisfactory and provides flexibility based on the complexity of the problem. These are all important processes of the due diligence. And finally, think about next-generation security. There's much changing within the security landscape, particularly as security is being tied in more with the handset, OS, and carrier platforms. Consider if you're okay with having third parties be involved in the login method, or if you want to develop those on your own. So the next few bullets simply provide some categorization looking more strategically at a vendor. The first thing is to get a hold of a product roadmap and have the vendor review with you periodically to ensure that it is meeting your growing needs. As mentioned, the level of flexibility of delivery models, platforms, and for some institutions' languages could be an important factor, particularly for global organizations that may be looking to deploy solutions across various regions. Excuse me, the pricing models are also important, particularly with higher growth solutions like mobile, or one should like the pros and the cons of a licensed solutions versus more pay as you go, right? So look at what the vendor is investing back in their platform, particularly if the platform is one of many services and solutions being offered. Is that investment indicative of an organization that is looking to grow, right? And be sure to do the necessary information to look at the long-term health of the organization. And make sure that any risk assessments you do for critical vendors, and I would include mobile as a critical vendor, for most of your customer-facing solutions, should be considered mission critical. And mobile is really becoming a primary, if not sometimes only channel for some customers to interact. So I'm going to finish up here with a few best practices that we've heard from other bankers in regards to mobile banking. So whether it's a brand new install, an upgrade to an existing platform, or switching vendors, this may or may not apply to you or your organizations, but I think that overall it's good information for most. So first, a bullet here, and something I know I've been hitting on, is that the integration back to the core platform is a big component. And oftentimes this is where organizations revert to their safe place. So regardless of where you go for online banking, there's going to be integration efforts required, whether it's back to the core, to collections, to your CIF, or to general ledger. There will be interactions going back. So being able to see previous examples, if possible, of similar integrations to yours is a good place to start. All right. So next, make sure that your documentation is up to date and it's well laid out during the due diligence process. It's not only going to help those involved in the project, but it will ease future audits and examinations, and it will provide an excellent starting point for the next time an upgrade is needed. Look at the current workflow for your digital platforms and mobility and review and adjust where necessary. This means that it's important that as the technology changes, you have to change your workflow around it. Oftentimes, the technology is shoehorned into an existing workflow, and it should really be the other way around, right? Let the workflows change to meet the new technology. Mobile-first option may be important to some institutions, and if so, make sure that you are using a solution It has all the bells and whistles needed for a consumer who is in fact using mobile as their primary, maybe even only method of interaction. And the next one, I can't stress this enough, use your references and try to find some that are similar in size and look to you. We hear that all the time. I'm really always amazed and kind of delighted to see how much cooperation there is within our organizations and our industry when it comes to this. It's not something that should be taken lightly. Verify that the vendor has an excellent track record, particularly when it comes to implementation and post-install support. Next, consider the pros and cons of combining online and mobile into one platform. As I discussed earlier, there are definitely reasons to keep them separate. And I'm going to wrap up here and turn it over to Kony. A few more bullets from my field here that I had gotten. Make sure there's sufficient training given to the branch. Even though one may think that mobile users do not use a branch, I think the stats I provided earlier shows how important the branch is to the relationship, and this is even true for the mobile customer as well. Make it easy for consumers to add new products and services. Once the customers authenticate themselves to a platform, it should be a clean process to add or onboard other products or services within the mobile solution. That ties into the next one, right? Enrollment and onboarding should be completed using a mobile device, not necessarily a combination of mobile, online, and or branch visit, although that certainly needs to be supported. I can tell you I have done an account, I have an account rather with a small credit union, and I've had to make many phone calls to get my mobile banking to properly work, and really that should not be the case. And finally, targeted marketing for now is more important to the bank than it is to the customer. We need to figure this out as an industry. The offers can be good, and I hate to use a phrase, win-win, but I think that customers will be more receptive to this if they do feel it is kind of a win-win. And if this is done properly and it's not obtrusive, then I think we'll be able to do more on this. So that covers my content for today. I'm going to turn it over to Steve at Kony. Go ahead, Steve.
Hey, thanks, Mark. Those were some great insights that you shared. And after this webinar, be sure to shoot me the name of your credit union, and we'll make sure that's taken care of.
Will do.
I'm just going to talk a little bit about who Kony is and what we're doing in this retail banking area. And so for those of you who may not be familiar with Kony, our mission is to rapidly and continuously deliver exceptional mobile experiences with exponential outcomes for our clients and, more importantly, their clients as well. And so we're founded in 2007, have over 300 enterprise customers, and published over 1,000 enterprise apps. And we're the largest pure-play enterprise mobility player and a recognized leader in enterprise mobility solutions. Mobility is all we do, and we do it well. So we have customers, just to give you an idea, across many industries, healthcare, retail, HR, and others. But a key area of proven success is with financial institutions. And so Kony serves over 30 million mobile banking users across 38 countries. And those users make over 2.5 billion transactions and deposit over 24 million checks remotely every year. And we're growing rapidly. So we've got a lot of experience with financial institutions. And so I've shared a little bit about background about Kony. So let's take a look at our approach to delivering these exceptional mobile experiences. So there's a lot of companies who offer mobile banking solutions. Many of you are using various companies now. And Mark talked about some of the strategic considerations as you choose who to partner with. And one key thing to consider is the overall approach. So traditionally, a lot of apps are built taking a systems of record approach. So they take built with the back end in mind first, looking at what data is available in the system of record and making an app and a front-end interface to access that data. But at Kony, we take a very different approach. We use a system of engagement approach where the starting point is consumer first. So we create a unified user experience that seamlessly integrates siloed back-end systems. And so by focusing on a great user experience first, our clients are free to innovate and aren't limited like those who start with the mindset of thinking back-end first. And a lot of the customers that we've talked to and banks that we've talked to, credit unions and others, they're sometimes looking at just a retail banking app, but a lot of times they're trying to figure out how do I integrate my commercial banking or wealth management into that, and how do I piece together different data from the different systems of record. And so when we start with the customer first, we try to figure out what the customer is trying to do, and then we integrate with all those different back-end systems to deliver what the customer is looking for. And so the reason we can do that is our Kony Mobility platform. So our mobile middleware services integrate with various systems of record. It's an open platform, which is really important. So clients can use whatever third-party tools or native SDKs that they want to develop the front end. And so this has been key. Some people want to use HTML5. Some people want to use PhoneGap. Some people want to code in native. They can do that. But we also offer, and Kony offers award-winning front-end tools. Kony Studio and Visualizer are well known in the industry. And that makes it really easy to design and build great user interfaces. And so for retail banking, we can provide an app accelerator also that sits on top of that platform that speeds up the implementation process. And the finished app can then easily be deployed across various channels like phone, tablet, web, and even wearables. And so that's been a trend that's been increasing as well. So we reviewed our customer-first approach and looked at the Kony Mobility platform, which enables exceptional mobile experiences. And now I'll share a little bit about our solution for retail banking specifically. A common challenge we hear from banks is that their current mobile banking app isn't flexible enough to innovate quickly, and that it's just a me-too type of app, so they can't differentiate themselves from the competition. With Kony, our clients get all the latest functionality around account management, payments, the things you'd expect, P2P, mobile deposit, different security features, and brand experience. But since the app's built on the Kony platform, they're also able to quickly adapt to the changing market and innovate. And so you're not necessarily just getting what you might get with a core banking platform vendor where everybody's looks like yours, but you're able to change the front end as well as change the features within it. And so we allow the customization for the user experience and the interface so it's differentiated. And then I know that we want to save some time for Q&A, but you can always find more information at Kony.com, retail banking, and also shoot me an email at steve.luong@Kony.com if you have questions or want to find out some more detailed information. But why don't we open it up for Q&A time now?
Great. Thank you both, Steve and Mark. We'll kick off the Q&A session now. If you haven't already, you can submit your questions through the Q&A panel that you have available to you. So please feel free to submit your questions there for our speakers. And we'll go ahead and kick off here with the first one. You mentioned that mobile first may not be for all organizations. Why is that? And is that a good strategy in your opinion? That might be true.
Yeah, Kevin. Yep. So it's interesting when I talk to banks. Oftentimes they kind of go into their mobile, like I said, more defensively, right? And they're like, I'll just kind of deploy it and so I can say I have it. And then what they rapidly find out is wow, there actually is a group of customers that prefer mobile, and that's going to be their primary interaction. And I live in Boston, and a lot of people would assume, it's probably in big developed countries and cities and things like that. And the reality is, I've talked to rural institutions, right, where sometimes a branch may be 40 miles, 50 miles apart from each other. And what they've found out is those that live furthest from the branch are actually the ones most likely to kind of have a mobile, kind of first, maybe mobile-only relationship, right? And certainly we've seen that in developing countries, right, where they're actually bringing the banking on mobile devices to the customers, right, as opposed to having the customers coming into a location. So I do think having a mobile-first strategy is good to have, and I think it's a little short-sighted to kind of not anticipate that you can have customers that will be mobile first and mobile only.
Great. Next question here is for you, Steve. Do I need to run Kony Studio in Mac operating system to generate iOS apps?
No, you don't even have to use Kony Kony front-end tools at all. You can generate that natively if you want. There's various options to generate iOS apps.
Okay, next question here is, from a feature standpoint, what are you hearing from your customers about what's next, Steve?
Sure, I'll take that one. Well, user experience is an area that comes up in almost every conversation. Financial institutions we've spoken to all continue to want enhanced user experience, and that's often the reason that they choose Kony. So they're looking for a way to take advantage of contextual experiences that only mobile can provide. I mean, Mark talked about some of the other industries and how they've used your location and GPS to do offers. People are asking about how to use predictive and location-based alerts and notifications to add value to their customers, whether it's an offer or just other information that's relevant at the time and at their location. We've also been hearing about some creative use cases like people asking to use their phones to take a picture of a house that they're shopping for or interested in, or the VIN number of a car that they're looking to buy, and having it go straight into the loan process. And so there's all sorts of use cases like that that are coming up as well. So taking advantage of the native features of the phones, and then thinking from a mobile-first mindset unlocks a lot of these kind of possibilities.
Okay, great. And next question is, we as bankers have the biggest challenge of having to manage different apps for different platforms, which delays our time to market with new services. What's the industry trend on the pain point?
Sorry, let me take a look at that one. Managing different apps for different platforms. Is that question directed at Mark or me? Let's see.
And I'm curious, so are they talking about different, obviously it's tough diving into the next. So they're talking about different platforms, i.e. Android versus Apple, or different platforms, meaning, you might have a retail banking platform, you might have a commercial banking platform. I'll take it from that, right? Having multiple app platforms, if you will, for different bank services. And there has been somewhat of discussion. I haven't seen a lot of practical implementation of it, of trying to create a super app, right? That one app that can be deployed, that would do everything within the financial institution, right? So their wealth management, their commercial, small business, retail, et cetera. And basically based on the authentication, it kind of changes the experience. The challenge you have on that is, quite honestly, it's really putting all your eggs into one basket. And when people generally stay away from that, what happens if you're doing an upgrade, something happens, now all of a sudden you're not just impacting one set of your customers, you might be impacting all of your customers. So if the question is about the different bank types, services, that's how I would answer that one. Steve, I don't know if you want to answer it about different platforms, maybe on the mobile side.
Yeah, definitely. So if the question's around like having different devices and different OSs like iOS, Android, Windows Phone, the trend in a lot of it is not to write multiple times and deploy to multiple devices, because as you said, that may delay time to market. So some folks are using the approach that Kony uses, and they're trying to find a way to write or code once. So with our platform, for example, you can code once and then you can deploy on multiple edges. So you can deploy, then quickly take it from iOS to Android to Windows Phone as an example, and then across devices too, from phones to tablets. And all of that last step actually happens very quickly, so you don't have to recode everything for each different type and each different service. So that speeds the process considerably.
Awesome. Thank you both. Next question here is, why should I worry about the branch when discussing my mobile banking plans?
Yeah, I'll take that because I certainly brought up the branch a couple of times, and it seems counterintuitive to talk about um, something physical when you talk about mobility. But mobile banking and the mobile benefits we feel are going to go beyond just what the consumer has, and we envision kind of an employee augmented environment, right, where the consumer walks into a branch. They may have started a transaction online. Maybe they have some geolocation component where the branch employee knows they're coming to sign some papers or to pick up an instrument. And we feel it's just going to make the consumer experience that much better, right? So looking at ways of integrating the mobile experience and the mobile benefits into the branch, and that doesn't mean, and I see a lot of banks rushing into trying to create their branches to be 100% self-service, and I don't think that's the answer either. I think what we need to do is, as a customer comes in, they might have different levels of how much employee assistance they need and how much self-service they want to do. And kind of like a concierge, right? You have the option of going to the concierge at a hotel and asking him or her to recommend restaurants. That's one option. You could say, "Can you go ahead and book the restaurant for me?" That's a second option. Can you call a cab or give me a car service to get there, right? So basically, whatever level of engagement you want to do with the institutions, we feel that they should be able to handle that.
Great. The next question here is for Steve. What is the onboard timing from start to finish with respect to an out-of-the-box product for banks and building society, i.e. credit union, co-op group?
Yeah, so that's a great question. And the time it takes to build and deploy is dependent on a lot of things, like what unique features you want and the integrations required on the back end. But as you said, out of box, we've got experience deploying we actually offer a quick start managed service where you can get a functional app in 100 days that's ready for user testing. So that's kind of a ballpark figure, again, as out-of-box features. And if you want to add things, sometimes it could take a few days longer than that.
Okay, great. Next one started towards you too, Steve. What core banking systems can you integrate with?
So we've got experience integrating with a lot of different core banking systems, including providers like Fiserv, FIS, Jack Henry, and many others. So we've got hundreds of customers and a lot of banking customers within that, and experience integrating with a lot of different kinds. But definitely the big players like Fiserv, Jack Henry for credit unions, those type.
Okay, and what other industries have you looked at for mobile satisfaction? How did they compare to banking and retail?
Sure. So we looked at banking, retail, and healthcare. And maybe it's not a surprise, healthcare did very poorly in our satisfaction for online and mobile. And healthcare is interesting because they are similar to financial services, a very heavily regulated industry, but they are struggling with certainly privacy issues, and it's the same thing when you're walking into a doctor's office. How much information about you do you want them to have? So maybe on the mobility side, we see most of that. And healthcare really is going more towards the on the employee side, right? Maybe getting information to a physician prior to your arrival to help with diagnosis. But right now, banking and retail are kind of charting very similar, and healthcare is kind of lagging those two industries.
Great, and that'll about do it from us. Thank you, Mark and Steve, both for your great presentations. With that, today's webinar comes to an end. Thank you all for attending today's webinar. If you are interested in this and or learning more on this topic, you can visit our company websites or contact us directly via email or Twitter. If you asked a question and we didn't have a chance to get to it, we'll do our best to get to it as soon as possible. Once again, I'd like to thank Mark and Steve for presenting today, and thanks to all of you for attending today's webinar.